All right, good evening. It's 6 o'clock and we're going to in Perth and 9 o'clock in Melbourne and Sydney and 8 o'clock in Brisbane. So time to get the show on the road. My name is Garth Davis and I am the founder and CEO of Property Powerhouse. I'd like to offer you a very warm welcome this evening to this property market update. Thank you for sparing the time to get educated about what's happening on the ground as of today in the property market. I believe a fantastic time. I've been living in Australia now for 20 years. I believe this is the best time in those 20 years to be a property investor, and we'll be talking you through the reasons why I believe that is the case. And we have some fantastic speakers on the webinar this evening. On the screens, I think you can see we have Murray McLean. Give us a little wave, Murray. He's from Albany, very astute investor, been investing for 20 years. On my screen underneath that, I have Samara Bedwell from Vegas, Brisbane. Look at that background. Wow, isn't that, you just want to get on a plane and go over there. So good evening to Samara. Then we have Jamie Horner, who's based here in Perth, also beautiful back setting there in Perth, and also have Gareth Lee Bell, one of our property consultants here in Perth. So give him a little bit of a wave there, Gareth, if you can. I know he's just setting up his camera at the moment. So, all right. So look, we'll get the show on the road. We've got information-filled evening. Just a couple of things to help you. So you've probably got our 5 videos on the right hand side. So just a little bit of housekeeping. If they get in the way of any of your if they get in the way of any of the slides, you have 3 options. If you go to the top of the photographs or the cameras or those 5 videos, there's a little single bar there that'll, I think, reduce us completely. If you go to the next little bar to the side, that will only highlight the speaker speaking at that point. So it'll only take up 1 box, and then the other box is the one with the 2 lines, and that will allow you to see all the presenters at that time. So just to help you, and you are able, if you grab the top of that little black bar, you can move that bar around a little bit to the side, or if it's in the way of any of the slides. Okay, I'll take us through to the next slide if she wants to behave. There we go. All right, so we're going to take you through just to our disclaimer. So obviously tonight we're going to be information-filled evening with what's going on around the country. The information is obviously general in nature. Everyone's specific circumstances are very different. Your wages are different. Your risk thresholds are different. Your ages are different. Your desires are different. Your needs are different. So this is general information, but the people on the webinar tonight are real experts, and having a chat to them one-on-one will really help you with that. So I'm just going to move my information out of the way so I can read that through to you. So the Property Powerhouse mission statement. So by providing education, support and experience, Property Powerhouse enables mum and dad investors to buy properties all around Australia, building up their wealth, enabling them to retire debt-free on their own home, and create multiple passive rental income streams. So that's what we help our clients to do, and we are passionate about it. We have a clients on this evening, Bianca and Matthew Reading from Sydney. They recently settled in a property in Brisbane, and I just want to read it to you because we were absolutely humbled and thrilled with the testimonial. So where to start from the first phone conversation to the final outcome. We knew we were in the hands of an experienced, forward-thinking professional who made us feel completely comfortable with the process of our first investment property. We are based in Sydney. Their finance brokers in Adelaide. I was helping them as the consultant here in Perth, and they bought a property in beautiful Strathpine, Brisbane. Not only to coordinate, guide, and support the process, they felt a real connection with myself, as in with my team members, who took the time to explain and answer every question we had along the way. It can be a challenge to develop a connection remotely. However, through our phone calls and emails, we quickly developed trust and new Property Powerhouse with the experts to steer us in the right direction. Our first experience with investment property was they were thrilled with the outcome. Do yourself a favor and connect with Property Powerhouse, and you won't be disappointed. Highly recommend just reaching out and having a conversation. So we're very proud of that. And also we encourage you, as part of your due diligence, to go to Google, have a look at our Google reviews. Being the owner of the business, I am obviously very driven to make sure that we do the right thing, or my team does the right thing, and we have a very good reputation, which has got to be priceless out there. All right, I'm going to hand you over to Gareth Lee Bell, who's one of our property consultants. I've known Gareth, I think, for about 4 to 5 years now. A wonderful person, and got a lovely family, and it's great to have him on the team. He's on the journey of building up his portfolio of properties, and he brings wonderful different skills to myself and the other property consultants to the business. So it's great to have you with us, Gareth, and a very good evening. And if you just want to unmute yourself, I'll let you go from there. So good evening, Gareth, and what are you going to talk to us tonight about?
Good evening, Garth. Good evening, everybody. You've kind of given the game away in terms of what I'm going to talk about by bringing my slides up straight away. But yes, I'm going to talk about time in the market. And some of the audience, if you've registered on a previous webinar, particularly one that I've spoken at, or a actual in-person event, one of Garth's events, I tend to focus on my own property journey. And I'm going to give some examples about the difference between time in the market or timing the market, and certainly would be keen to understand, I don't know if people are allowed to add some comments, what you think is better, and where you think your strategy might focus on, sort of time in the market or timing the market. So I fortunately actually noticed a very interesting quote or comment today on one of the online socials, whether it was Facebook or LinkedIn today, about a conversation between Warren Buffett and Jeff Bezos. I'd like to think that most of the people on this call as investors are likely to have a good idea who both those individuals are. Warren's obviously a lifetime investor and one of the most successful that there is. And Jeff Bezos is obviously the guy who started Amazon. So anyway, Jeff was having a conversation and had a chat with Warren and asked him, he said, your investment thesis is so simple. You're the second richest guy in the world, but the way that you make money effectively is so simple. Why doesn't everyone just copy you? To which Warren replied, because nobody wants to get rich slow. And I think the reason that I raised that comment is because it does speak to certainly my approach around which of these two options up on the screen I see as being more important than the other. And certainly attempting to time the market and get in at the right moment, exactly the right time, is excessively challenging and something that you probably have to attempt to do 100 times and you might get it right a handful of those. So certainly for me, time in the market is the best approach to take. So Garth, if you will, click forward, sorry. If you are able to pop your comments in, maybe I've given the game away. Maybe you observe the same approach that I do. You believe time in the market is the best. But either way, if you can just let us know in the comments what you think is most important and possibly why, and it'll give us an understanding of what your strategy is when it comes to property investing. So I have one more slide, and I'm obviously not going to take up too much of your time. But if you can move slowly forward, Garth, just take us here. I'm going to try and relay why I believe this is the case from personal experience. I used to live in the UK before I came to Australia. I'm originally from Zimbabwe, which may be, you may tell from my accent, but I met my wife there and got married and eventually moved over to Australia. But way before that took place, around 2008, I had actually just recently broken up with a girlfriend of mine, and yet we both made the decision that we were going to invest in a property together. So I don't know how many of our audience have made a similar leap of faith, breaking up and then buying a property, but it's probably not necessarily the most advisable approach to take. Also, with hindsight, I'm wondering how many people as well bought their first property as the GFC was about to hit. So we settled on a property in about April 2008, and within 3 months, Lehman Brothers closed its doors and the proverbial hit the fan. The outlook of the future, particularly if you read the media, was that we'd pretty much reached the end times, and life was never ever going to be as good as it used to be. We held on to the property anyway. My girlfriend, or my ex rather, sorry, continued to live in the property. I was, as time went by, and you can see the timescale sort of tracking from left to right at the bottom of the screen. Actually, having settled on a property with my ex, I was very fortunate. At the end of the year, I actually met my wife. And by 2009, we had gotten married. 2010, we had our first child. 2000 and I don't want to get the dates wrong. 2012, we had our second child. 2013, we had our third child. Time was passing, and as you can see, the property that I'd invested in was not doing particularly well. However, life was carrying on. And 2014, with a wife and 3 kids in tow, I immigrated to Australia and arrived around September of 2014. If I was to take the approach of timing the market, I think we'd all probably agree that I'd done a pretty poor job, and it was a particularly bad investment if we're judging it based on that. However, Garth, if you will, as I mentioned before, life went on. We settled. We've been living in Australia for what would be almost 6 years now. And I think I've actually had a job in Australia for 6 years and 1 week, which is quite an achievement. I'm very lucky and very fortunate. And as you'll see from the next slide, the market recovered. The property cycle continued. And actually, I'm not worse off than I was when I first bought the property. If you consider all of the things that I've gained, a wife, 3 children, a life in Australia, and a property that actually has gained value, I think you'll see that the point that I'm trying to make is time in the market is the best approach to take when it comes to strategy. You may have a preference to flipping a house. That could possibly make you money, but I think as you can see from this, the property value has almost doubled, and certainly will within the next sort of, I'd like to optimistically say, I mean, I don't have a crystal ball, but the likelihood it may double within another 5 years. So I think we're on the right trajectory, and I think the decision was the right one. But the moral of the story, which is something that I go back to every single time I do give a presentation on one of Garth's talks, is that if I hadn't taken the leap with my ex-girlfriend in 2008, just before the global financial crisis hit, I would not be in the position that I am with regards to that property. I would have second-guessed myself. I would have laughed at everyone who bought a house in 2008 and thought, what a monkey. That was a silly idea. You should never have done that. And yet, as you can see from this, I would have gained. And just for reference, sorry, the slide that I am showing you is the average house price within the UK in that time frame. And I don't have the website, but if you did want to get hold of it, I can provide it just to show you that I'm not just plugging some figures into an Excel spreadsheet and pulling a graph out of my hat. So I'm not sure if we're open to take questions. I'm available to provide my email address, which we can mail out if anyone did have a question about my journey. But I highly encourage you to just start, because time in the market is going to make all the difference to your property journey.
Thank you, Gareth. And while I got you, Gareth, also, I mean, you have also carried on with your investing journey in Australia. So maybe just for a minute or so, tell us, bringing those experiences from the UK, a little bit about what you've done and where you've bought in Australia. Relatively soon after meeting Garth, my wife and I decided to invest in Brisbane following an event, in-person event.
with Garth, and we invested in a unit that is in Brisbane in a suburb called Albion. I'd probably suggest that the Albion unit is on certainly a better trajectory than the UK unit, although it still has yet to reach the right-hand side of the graph at the moment. But we've got an excellent property manager in place. The process itself, in terms of buying the unit, was facilitated by a lawyer based out of Brisbane, a settlement agent also based out of Brisbane, and these were part of the property team, which is a theme that that Property Powerhouse are very strong on, where you assemble a team of the right people and they all will work together, as per the example Garth gave a little bit earlier, to get you the outcome that you're looking for. As we're all aware, this last year has been a little bit tough, but I've worked very well with my property managers, very well with my tenants, and we've been very fortunate in Brisbane that we haven't had certainly complete vacancy, and we haven't had our tenants sort of decide that they weren't going to pay. So we worked very well. We got a very good outcome, and certainly my aim is that sticking to that market and the time that I will spend in the Brisbane market is going to mean I'll be looking at a similar graph in 5 or 10 years' time.
Fantastic, thank you. And we'll look out for some questions in the chat box. There's a Q&A box there. Right, so I'm going to now take you into what's been actually happening in the market. So thank you, Garrett. And we'll also be hearing from the investment journey from Murray in a little while. Samara will be talking about the Brisbane rental property market, and Jamie talking about the Perth rental market. So CoreLogic are the Bible of residential property sales and recordings. And on the screen here, you can see this was data as of the 31 October. Now, it's a few weeks ago, but this is something they bring out literally on the first day of every month. And I always find it very, very important to find out what's going on. So obviously on the left-hand side, we've got the capital cities. The extreme right-hand side is the median values. And as we expect, Sydney and Melbourne are the expensive cities, going down to the more affordable properties. Now, those median values are across houses, apartments, townhouses. So again, we know those can be misleading, because in Sydney, actually home prices are well in excess of $1 million. It's the apartment prices that are more affordable that bring that down. In this column here, which is per month, it tells us what has happened in median prices over the month. Again, it's a very short period of time, so it's not a massive indicator that you should really make your final decisions on. That is more the quarter, and the annual will give us a really good guide, but it is good to see what's happening. Now, on the back of COVID and all the uncertainty that we've had, you can see the property market has been very, very strong and has sustained a lot of all the insecurities and unknowns of what's been going on the market. And as we know, Melbourne has had the strictest lockdown with COVID. They haven't been able to have sales of properties done properly, home opens, rental home opens. So the real estate market has been doing it particularly tough there, just because they haven't been able to go around about their normal business. But the rate of decline in Melbourne is actually slowing up, and we would expect probably at the end of this month for that actually prices not to have been going down at all. But all the other capital cities, you can see property has performed well over the last quarter, over the last month. Let's have a look at the quarter. Now, this is over a 3-month period. This is a very good indicator of where the market is going. So we can see Sydney and Melbourne doing it a bit tough. They'd hit their big prices. They had been building a lot of stock, and there was a lot of construction there for international migration. Which has obviously, the taps have been on hold there. So what's happening is we've got a lot of supply coming on, and we've got a lack of demand. So fundamental economic play is at play there. And what's happening is we've got more properties there than can be bought and or rented out. Brisbane, which is a key area of our research, we are very, very confident in the Brisbane market. You can see it's performing well. It's sustainable growth. It's not going crazy hot, but it's working really, really well. And as you hear from Samara a bit later, what's happening from a rental side, we're actually battling to get properties, brand new properties in Brisbane. I'm talking to my builders, developers, and they're saying to me, Garth, as soon as we're getting product, it's literally out the door. So it's a sign that demand is very, very strong in Brisbane, and supply is not keeping up with demand, which will lead to price increases. The other market that we particularly very invested in from a research perspective is the Perth market. And as anyone who knows that has been living in Perth, we've had a torrid time for the last sort of 5 years, property prices dropping, and rents dropping. If you're a landlord, that's a terrible thing. But if you've been a renter, well, you've been the recipient of that. But those are particularly the two markets that we're really interested in. Very stable, Brisbane and Perth. And we'll show you some other graphs in a bit. So these are, Heron Todd White is a major valuation and property research company. Heron Todd White, HTW, as you may have heard them abbreviated. They have a property clock that, again, they run monthly, and it tells us whereabouts. So obviously, peak of the market is where, if you're holding, that's a wonderful place because the market's been performing really well, and that's sort of at the top of the price. Where we would all like to be buying is at the bottom of the market before the market rises. And obviously, the peak and the bottom, you only really know in hindsight, because who will actually know when it's the very bottom of the market or the very top? But that's why we have these research teams like Heron Todd White to help us. Interestingly, what you'll see, much like we were saying just now, declining market in Melbourne and Sydney for houses. All right. What we can see down here, start of recovery, we can see Perth and Brisbane. So again, not approaching the peak, not going too hot. We're getting in early. So about 7 o'clock, that's one of the reasons our research too showing Brisbane and Perth very strong in the market. These are in the houses segment. The next slide will take us to apartments or units. All right, so these tend to be 2/3 of all apartments or units are owned by investors. So this is more an investor type of product, normally much closer to the CBDs, normally in a high rise, and normally, you know, multiple dwellings, you know, maybe there's 8, 10, or there's 100 of them. So let's have a look at what Heron Todd White are calling the market from a property clock. So in the form of units, again, we'll see here Melbourne, Sydney, Perth, they're seeing potentially a little bit of oversupply and the market still dropping in that space. When we come across here, start of recovery coming down in Brisbane. So as Gareth was talking about his property in Brisbane, it's been sitting at the bottom of the market for a while, and now it's hopefully starting to move and trend upwards. Now, this is obviously, the market's moving at the moment almost on a daily basis. And where I sit with my research, I would be not putting Perth apartments there. I would be putting Perth apartments right down probably at 5:30 or at 6 o'clock. The reason I tell you that is, again, working with builders and developers, which is what I do every day as part of my research, is any completed, brand new and completed apartment in Perth is starting to move and move very quickly. One of the builders we were talking to, Sterling Capital, builder developer, they've told me every single completed apartment they have in Perth will be gone by Christmas. So what is actually happening, and again, he said to me, is it's normally in your own state and your own city that people are the last to respond. So he said the Perth investors are probably waiting till all these rent increases come out in April and May, and then they will be chasing the market. They will be buying off the plan and properties that are not complete. He says the people buying now are your interstate investors that are seeing excellent rental yields and very affordable properties in Perth. So that is just something of my own research and our research at Property Powers, that Perth is probably much more at the bottom of the market and running out of stock quickly. So yeah, a couple of clocks there from Heron Todd White. Good to see what different people are calling in the market. This is ANZ research. So ANZ, every bank has their own, they have huge departments of researchers and economists. So actually I got this data today, and it was talking about how ANZ had actually been one of the banks that were being very pessimistic at the beginning of COVID. And they had predicted that the property market would be dropping by 10% this year. And they've done a complete about face literally in this last week. and they've gone from -10, they've gone to like a +9%, and that is nationally. The interesting thing here with ANZ is that they are actually forecasting Perth to be, so the blue color, the turquoise color here is what they forecast for 2021. The gold color is where the market has been in this current year, and last year is where the red has been. And as we were mentioning, Perth's been in a very difficult place as an owner. Your values have dropped, and same case has been with Darwin. And this is why our Perth-based people are waiting, because they've had some pain over that previous period, but you can see a bit of correction. But ANZ Researchers are predicting that the Perth market has the strongest rebound. Now, this is in 1 year, and not over 3 years. This is a 1 year forecast to Perth to go, and this is not Property Powerhouse's thoughts or ideas. This is independent ANZ, one of the major banks, talking about a 12% increase. The other market, as we say, that we're very interested in here from affordability, supply, and rental demand is Brisbane, which is also shooting the lights out there at 9% growth. So both of those positioned at beautiful stages of the correction in the cycle. So that's ANZ. Let's have a look at what Westpac said. Now, Westpac have taken a 3-year forecast here. Again, this was displayed in the financial review, and done by Westpac's own research and research department and economists. And for the 3-year, they've been talking Brisbane as their #1 location as a 20% capital growth across all properties. So that's houses and apartments, and Perth to be second best at 18. Sydney showing some good growth, and Melbourne coming stronger again. So between the main banks there, Westpac and ANZ, Perth and Brisbane, again, reinforcing our research, those are the two markets. Affordability, and when we talk about affordability, we're talking about a percentage of people's income to pay the mortgage. The median house prices are more affordable, the wages are strong, a percentage of your wages to pay the mortgage gives you upside on that. All right, we know from the Reserve Bank here that the Reserve Bank cash rate dropped to 0.1%. Fantastic, lowest time ever for borrowing money. So as long as you qualify and you can show the bank that you can repay your loans, the government are encouraging this. They want property to be one of the drivers of the recovery. So obviously there's a lot of jobs that have to be recreated after COVID. And what they want to do is get the economy going. They want some cheaper money. They want people buying, spending, and it's definitely happening in the property space. So let's have a quick look at interest rates. As we said, the Reserve Bank are lending relatively cheap money here. So I got this today. This is hot information, and this is through one of the main top 4 lenders. So as an investor, 80% loan to value ratio, your variable rate about 3.19. You can fix. If you're worried that interest rates are going to go up or down or whatever, you can always fix for 2 years. If you've got a slightly higher loan to value ratio, which means for the people that don't understand that, it means you've just got lesser deposit and you're going to borrow more from the bank, then you're a little bit more risk to the bank, so you pay a slightly higher variable rate, but your fixed rate you'll see is as the same. Now, we can get other lenders, I think it's Suncorp Medway, that can do 2.89. So again, you work very closely with your finance broker to get the best deal for you. When it comes to your own home, fantastic rates out there at the moment, 1.99%, 1.98%. So very important that you work closely with your broker. All right, and as we said, rents are on their way up. We're going to hear now from the property managers about what's happening in the rental space. Great time. I'll go back to where I started. I think this is the best time in 20 years to be buying an investment property. Money is cheap. Rents are going to go very strong. Properties are going to be cash flow positive. If you're borrowing at 3% and less, and you're getting 5% rental yields, you're getting 1, capital growth, and 2, you're getting the positive cash flow. So I think it's an extremely exciting time. Right, that's it from me. A quick cover of what's going on around the country from that perspective. Now I would like to introduce you to an expert in the Brisbane market. So that is Samara Bedwell. I've known Samara for 15 years. Wonderful person, owns her own business, passionate about helping property investors and their tenants is a lecturer at the Real Estate Institute of Queensland. So she is, and I think has just won an award, I think. But I'm going to hand you over to Samara. Samara, what's happening out in the market there in Brisbane and Southeast Queensland?
Thanks, Garth. Thanks for having me tonight, guys. Look, I think what's happening, I couldn't agree more with Garth. Now is a really, really good time to buy. I mean, I'm watching the Queensland market and there's some really, really brilliant opportunities that we see before us every day. And I agree with Gareth. As an investor, I bought my first investment property at 18, and the first one that I've held is the one that I'm making the most money from, like I'm seeing the most growth in. It definitely is something that you should be looking at long term. It's not a get rich quick scheme, I don't think, investing, but I tell you what, it's a way to really build your wealth for your future. So if we have a look at, you know, what's going on here in Queensland, Brisbane is likely to be one of the best property performing markets, and that actually came from Michael Yardney, who is a bit of a property spruiker. He does a lot of research across the country, and he's very serious about the Brisbane market. Low interest rates are meaning that people are looking at the Brisbane market quite favourably. Our price points are very, very inviting. I said in our last webinar that Queensland was very much I guess in a bit of a bubble. We weren't affected near as much with COVID, and that was because, you know, our southern cousins had huge peaks, and of course when you have these massive growths, when things like this happen, you have these big falls, and Brisbane didn't have these great big peaks and these great big troughs. We just steadily coasted along and saw growth steadily happening, and so we didn't take a plummet. But that means we have got some great investment opportunities, and I'll talk a little bit later about why we really do need you to invest in Queensland at the moment. So if you can go to the next slides, we're going to start talking about some stats, because obviously the evidence is how we make our decisions. And these are stats that have been supplied by the REIQ, Real Estate Institute of Queensland, provide a market monitor. And they very much like the property clocks that Garth's already shown us, but it's broken down. The red is the housing market, the purple is the unit market. And what you can see is that the greater Brisbane market is certainly in that steady to rising category, as is the Gold Coast is going through recovery. And so this is really, really good, because this is a good time to get in, buy in now, so that you've got to be able to make that money when it gets to the top of the market as well. In our units markets, over the last few years, we had a big saturation of apartment dwellings in the city. So we had an oversupply of property. Now that is starting to steady, and vacancies have certainly tightened up, which is, again, another good sign, because basically what we're predicting, and we heard yesterday that it is predicted that 350,000 Victorians are likely to migrate to this beautiful state called Queensland over the next 12 to 18 months. And guys, we really are not going to have enough property to accommodate that sort of force and drive. So this is a really good sign that our markets are really tightening up. So Garth, if you can flick to the next slide again, sorry. This data here is talking about vacancy rates. So right now, out of my whole rent roll, I have one property vacant. Now that never ever happens in the last little while, and it does right now because vacancies are extremely tight. If we have a look down the furthest column, you will see the word tight and healthy. Not one of these areas in our greater Brisbane, Sunshine Coast and Gold Coast regions have a weak vacancy rate market. So we just don't have the problem with oversupply anymore. We need more property. So that is really, really good signs as well here for us. So on our vacancy rates, and I was just sitting here counting before the webinar, the one property we have vacant is an apartment that's in student accommodation area. Now, obviously, with the border closures, international students cannot come at the moment, and therefore that's why this unit is vacant. Now, in saying that, if this was January, I could guarantee that that one would be hot off our books as well, based on the fact that there'd be local students looking for the accommodation around the university, etc. So we're going to do a bit of a price reduction and a bit of an adjustment on that and see if we can target someone that just wants a little bit of more inner city university campus lifestyle, even if they're not necessarily going to the universities. Also, in the last month, I have lost 8 managements. Now, that's significantly huge for me. I wouldn't have lost that over the course of a year in previous years. And these 8 properties that I have lost aren't due to mismanagements. They're due to the properties being sold. And I think what's happened is these investors needed to sell. And I always say to people, only sell if you really, really have to sell. If you can hold on to it and reap the benefits of long-term, definitely do that. But these 8 properties that we lost this month, not one of them sold to an investor. They all sold to new owner occupiers, new into the market, because interest rates are low and they can get in, the price points are really good. So that means that I've got 8 really awesome tenants that struggled to find property here. So we need more properties. So let's have a look at the sales figures based on the back of that. And this information here is sourced by CoreLogic as well. So Brisbane dwelling values actually have increased by 0.5% in October over the course of that month. Over the last quarter though, they increased almost 1%. So if we look at the overall last 12 months, our dwelling values have increased by 3.5%. We are at an all-time current record high with our values. So if you are already a Brisbane property owner, you might live here. If you're looking now to sell your home and buy something else, you're buying and selling in a really, really good market. So you're going to have the trade-off anyway if you're wanting to upgrade your own personal owner-occupier property. But you can certainly find some really, really good opportunities here in new housing, new units, some established stock. So there's lots going on here and sales figures look really great. My husband's a real estate sales agent here with me. I don't dabble in the sales. Jason handles all of that. And he cannot keep listings. We get them, we're getting multiple offers and the properties are walking out the door. The vendors are extremely happy and the buyers are ecstatic as well, because it just seems like there's a little bit in it for everybody at the moment. So Garth, if you can go to the next slide. What's next for good old Queensland? Guys, what we need to know is that at this point in time, 36% of Queenslanders are renters. And the rental sector is playing a critical role in our housing system. If we continue to have these tightening of our vacancy rates, it is going to put so much pressure on the housing sector. Antonia Mercarello from the REIQ, Real Estate Institute of Queensland, is currently lobbying with our housing ministers and our state government to actually do more to support investor activity, to help our investors have even a better chance at getting into the market. You know, the government's doing a lot, but we're asking them to do a little bit more, because we can see that there's going to be some real tightening, and rental availability levels is just dropping, and it's putting us under pressure. So really that's a bit of a rundown. I know it was quick, but that is the rundown of what's happening here in Brisbane. Look, our motto here at Macwell Property is that a great property management team should cost you nothing. But a bad one can cost you thousands. So whenever you are looking to get into investment properties, really consider partnering with people like Garth at Property Powerhouse, who'll put you in touch with the team, and he will do the research for you. I work with a lot of Garth's clients who cannot say enough about Garth and what he has done for them in generating wealth creation. So, and all the clients that he has referred to us have been brilliant to work for. And I think that it's just, there's this synchronicity that you can't get anywhere else. So these webinars are fantastic to open your eyes if you haven't already been an investor, but Garth really knows what he's doing, and he puts his heart and soul into looking for the right stock that's going to perform for you as well. So if you're looking for a property manager, guys, in Brizzy, I'm your girl.
That's fantastic, and thank you very much. Very humbled with that, and you know, and the same thing when we hear from Jamie just now. Wonderful having a great team, because when I phone my clients a month, 2 months, 3 months, 6 months, 12 months, 24 months after settling, I ask them, how's your property going? And what we like to hear is it's just ticking along nicely. And I say, how's your property manager? And they just say that they're brilliant, whether that's Samara or Jamie. And it's all about having a great team, secure team that we put you together. It's not a hit and miss. Let's try our luck. So thank you, Samara. You do a wonderful, wonderful job. And thanks for giving us an update. We just had a property settle in Brisbane today, and the tenants moved in today. There'd been a queuing for about 10 days. Had been pre-booked, so they had an on-site manager in the city. Otherwise, you 100% would have got those. But yeah, massive demand there. So thank you, Samara. We're going to go now to Murray McLean, based in beautiful Albany in Western Australia. So Murray, I'll get you to unmute. Murray is one of our wonderful property consultants here at Property Powerhouse. And Murray, I've asked you tonight to give us your top 10 tips as an investor. Am I right in saying that you've been investing for about 20 years now?
Yeah, that's right, Garth. Yep.
Brilliant. And you are starting to consolidate now. Starting to head towards retirement, and now you're starting to get a bit strategic with what you do with those properties. Do you sell them at the right times and that? And what I thought would be a wonderful opportunity. How many properties did you build into your portfolio, Murray?
Yeah, we bought into 10, and that included our own home that we live in. And each of those was in Victoria, New South Wales, Queensland and WA. And we did that to be strategic, to follow your time clock.
Brilliant, mate.
Because when it's up in one state, it's down in another state. So we just wanted to make sure we had eggs in the basket.
No, mate, and I'm going to let you give us your top 10 tips. What I wanted to do, there's a lot of people on tonight that maybe have bought that first property or are thinking about buying that first property. And I thought the experience you can offer would be priceless. So what are your 10 top tips to investors, newbie investors, and people thinking about investing? Over to you, Murray.
Yes, thanks, Garth, and thanks for having me on. They're not in order of priority. However, biggest thing is to have a good support team around you. Surround yourself with people that you can work with, that you can trust, and that are nice, that are good to you. Very, very important, because a lot of people go into property investing and they haven't got the time. That's the biggest not the excuse, but the biggest thing is, I can't do this because I haven't got the time. Let somebody else do it. Let somebody else who knows what they're doing do it. So, for instance, make sure you have a good researcher looking out for properties, a property consultant who knows what that can liaise with you and can help you over the rocky bumps and things like that. A finance broker, very, very important that you have a good finance broker that can find out what you can borrow, and they can put it all together for you. Probably one of the most important things is a property manager, and we've just heard from Samara and we're about to hear from Jamie. Look, I've heard of people that can be nasty and horrible to their property managers. Hey, they're your ears and eyes. They're the ones that are looking after your investments. They can make your life a lot easier if you're nice to them, and that's and treat them with courtesy. They don't want to be treated with abuse. And if you do that, I can guarantee you that, as Samara said, that they can get you maybe $20 or $30 more for a property, or they will explain to you what's going on. So it's a big thing. Is a good property manager. Find out what you can. Number two, find out what you can borrow. Always be able to know what you can borrow, and to have a good finance broker to do this for you is very important. I've been at fault over the years. Don't procrastinate. It can and it will cost you money if you do procrastinate. As Gareth said, it's not the timing of the market, it's the time in the market. So the best time to buy a property was yesterday. Second best time was today. Third best time is tomorrow. And it really is important. Invest with your head and not with your heart. Find out through your consultant all the figures, the free services that Property Powerhouse put together for you. It's very important that you know how much a property is going to, yes, may cost you a week, but more so in this day and age, how much the property will be cash flow positive for you. And on that, you can go to the Property Powerhouse Google reviews, and you can find out the Google reviews of Property Powerhouse. Over the years, it has cost a fortune, unfortunately, to keep properties. And I would say to people now, if you can't afford the shortfall, which at the moment there's no shortfall, but if you can't afford the shortfall out of your back pocket, don't buy a property. That's just one of my personal tips, and it goes right to my heart. We started off buying properties at 8.5%, 9%. They cost a lot of money to hold. However, property prices were rising, and we borrowed money to keep our shortfall. That I would never recommend that to anyone ever again. I really wouldn't. I'm being very honest, okay? As an investor, there's no such thing as a perfect property. You don't worry about what colour the paint is. You don't worry about if there's tiles to the ceiling in the bathroom. The property does not have to be perfect. However, it does have to be location, near shops, near hospitals, near schools. It's got to be well researched. It's got to have a great leasability aspect. That's where I come in and say, that's the perfect property. Through your finance broker, and I do it every 6 months, through your finance broker, check your interest rates, not only on the investment, but also on your own home. They're not going to come to you. You've got to go to them. Check your interest rates. There is no loyalty for old customers. A new bank will tell you, yes, we can do it for such and such. But if you're with a bank and you've been with them for 15 years, there's not a lot of loyalty. But once you call them, you will get an interest rate drop. And I can probably pretty well categorically say that, because the last time I did it, I got approximately $3,000 a year drop in my rate. My opinion is buy new or near new in or around the capital city as close as possible as you can to the CBD that you can afford. Okay? People say, Murray, when's the right time to buy a property? Hey, I then come back to them and I will say, you will know when the time is right. You will have a gut feeling. You will have everything line up. The ducks will line up. You'll talk to, maybe do, Garth will do a lot of research for you, and he will find out from Jamie and Samara, is there a rental market in those particular cities? It'll all come back to you, so you will know that the time is right. Most importantly, be comfortable. Enjoy your experience. It is an enjoyable experience. It really is. Be a sponge. Soak up as much as you can from the people that you have assembled on my first point of assembling your good team to help you. Use those people up. Talk to them, ring them up. Make sure you use them. And most importantly, enjoy your investment journey, because that's what it's all about. It's a lot of enjoyment. Have the right people around you and enjoy your journey. Thanks, Garth.
Murray, thank you so much for sharing your words of wisdom. My takeaway from that was is understanding the cash flow, one, of your property, and two, of your portfolio. And that's the wonderful difference now, where people have been able to borrow at 2.89% or 3% versus even when you were buying at 8%, or even when I was purchasing at 9.75% interest rates, it was still a very good educated investment to proceed. But those properties were negative cash flow properties, and absolutely now with positive cash flow in capital cities. That's why I say, for me, it's best time in 20 years. So Murray, thank you very much for sharing that. Nothing can beat experience. So really appreciate you sharing your thoughts and your ideas and tips with us. So thank you very much. Mindful of time, we're going to move on to our final presenter of this evening, Jamie Horner from Empire Property Management in Perth. Again, a fantastic preferred partner of Property Powerhouse. So, and also I've known Jamie a really long time. Again, her clients rave about her, and just like Samara, we just know that the clients are in extremely good hands. So welcome this evening, Jamie. Jamie, what's happening in the Perth market? Have we got, is there lots of supply? Is there lots of demand? What's going on?
Oh, there's lots to talk about. There's no supply and lots of demand. Now, everyone, I do talk quickly. Everyone that knows me knows that I like to get my words in. So I suppose for me, Garth, if we're going to look at the Perth property market, the first thing I'm going to say is, Gareth, I definitely enjoyed the time in market. Anyone that probably knows me knows that my love of property comes from my parents. They migrated here 35 years ago. Oh, actually, it's got to be longer. I'm older than that. So probably 45 years ago with about $50. And we were just really lucky that my mum tried sales, given all their qualifications sort of weren't recognised here, and bought property. Now, they did buy the worst property anyone could ever imagine, and English not being that great meant that the tenants were also questionable, lease agreements are questionable. And one thing that I did find out about property is that time in market is important. So those properties were bought in the 80s, and what they were worth in the 90s and today has made the difference. Now, the only reason I suppose I'm in property is the fact is I saw that for my parents migrating here with not much, it's what gave them their independence. It did not come without the nightmares, the chasing of the rent, the devastation. I think if I ever have time to explain to people, there was one where we even burnt down the backyard and potentially had to call the fire brigade. So they're not without their perils, but I suppose when you sometimes step back from it, the important thing is having the right people on the journey, which is, I suppose, why we're here. So let's get straight into the Perth rental market, because I'm quite shocked, actually. So when I look at the Perth rents and vacancy, everyone knows that from 2014 to 2019, it's not been the best for Perth owners. Samara talked about the fact of owners wanting to sell, and I've said the same thing. Look, if you can hold during this market, hold, because what we're going to see is coming, and it's actually already started. So let's have a look. Look, we roughly in Perth need about 6,000 properties, and I'm being kind when I say 6. We actually need about 7,500 properties to meet demand. And you can see why in 2017 it was just horrible, because we had 13,000 available rentals. We had an oversupply. Every single year we've chipped away from that. And the reason why I've broken down 2020 into 2 parts is you'll see that from 4 months ago, we were at 2% vacancy and 3,869 to now being 2,864 as of yesterday, and a 0.9% vacancy. Now, 0.9% vacancy, just if I could put that in layman's terms, is not look, great for owners, not that great for tenants. 3.2 is that lovely equilibrium. So you can see actually that from 2019, we'd actually already gone down past that equilibrium. So let's look at prices. What happens when you have high demand and low? If you look at the median house price for rent, it's already gone up $20 as the average, and that's a lot of properties you've got to take into account across Perth. Well, I did those stats for mid-June in June. So we're looking at 4 months ago, and we're looking at apartments. So houses a lot quicker than apartments because they're still in high demand and we don't tend to have them in supply. So Garth, I'll get you to flick to the next screen. This is what it pretty much reads. So unless you're we're at the article stage of people sleeping in cars kind of thing. I can't get a property. I think one of the, so we call it Department of Housing here, which is public housing. I had one of them attend a strata meeting I was hosting about a month ago, and I asked him how it was going, and they're pulling their hair out. The average wait for social housing in WA is 3.5 years, and for critical it's 18 months. And they say that every month they are adding 800 people due to that social housing of what we're seeing now. So if you're a bad tenant, you can't get a property in Perth. And even if you're a good tenant, you can't get a good property in Perth at the moment. So look, you can all read the headlines, but there's a reason why I circled the one in red. It's because I love our Premier, but at times I hate him as well, because in Queensland, they decided that they weren't going to extend the moratorium on rent. So just to let you know, since March this year, we've not been able to increase rent on an existing tenancy. That was supposed to end in October. So you would have seen all these headlines saying, you know, tenants brace for the October increase, tenants brace. The new catch cry is brace for the increase in March 2021. So March 2029 is when we are allowed to increase tenants who are on existing lease. Now, if you looked at my price is in June this year or even January this year, we've already gone up 10 to 20%. What we're going to see at March next year is another 20%, unfortunately. I mean, look, great for our investors, but for tenants, because our government has played into the market and pretty much removed rent increases, it's going to be a little bit of a shock come March 29 if you have not been leasing the headlines. Now, one other crazy one is that WA has 25,000 applications to migrate at the moment that our government is not currently allowing to happen. So if you saw that figure there of 2,800 and on normal demand, that generally the requirement is 7,000 or 6. So we're already 3,500 shy of meeting the current demand. Look, I don't know how long our Premier can be defiant on hard borders, but we pretty much got an almost 25,000 numbers of applications pending to enter WA. So for us, I don't think rental pricing will be 20%. I think it'll be a lot more. And as soon as Mark McGowan amends out, then we're sort of looking at even more crazier. So taken from REWA yesterday is you can see what is going on in Perth. Those blue lines and those red lines are quite evident. Units, like I said, always work a little bit slower. We just find that of the 2,800 properties we've got, half is roughly houses and half is apartments. And the demand for houses is slightly higher and the supply of houses is slightly lower. So hence why you'll always see houses just take a trajectory up. Now, as you can see, the trajectory has already gone up while we're in a rental moratorium, which means no increase. So again, you know, that vacancy rate of June 2019, as you can see, was 2.9% when it's highlighted coming up on there. And now we're at 0.96. So that's why you can see that we are doing that very large increase. Next slide, Garth. Okay, so Samara talked about how many rental properties they have. We roughly tend to run between 25 to 30 properties on our rental list. Now, at the moment, there are 2 that are vacant, and I can tell you exactly why they're vacant. They're old, and I don't mean that in a bad way, but they're old, unrenovated, and one of them's furnished quite interestingly. But out of the 8 properties that we have available for rent last month, these were our live stats. So if you came to WA and you were a good tenant, you're going to be, for my 8 properties, one of the 800 that looked at it. One of the 50 inspections, that's not even the number of people that attended. So you got 269 people that attended for 8 properties. I can't get my calculator out. So we recently had 48 people at a home open, and our biggest problem was COVID spacing, out of how to space people out, and 74 applications for 8 properties. So even if you're a good tenant, it's not a good time in Perth at the moment to try to be securing a property. Next slide, Garth. So we still have absolutely huge demand for houses within a 20k radius of the CBD. High demand still in metro beachside suburbs. To tell you the truth, I'd probably say that any metro beachside suburb probably has a real-time vacancy rate of probably 0.2%. And I'm talking $150, $200 higher is what we're renting properties if they're falling into that metro beachside suburb. Older apartments always continue to stagnate. So that the tough thing with older apartments is people want modern, sleek, new. We will have tenants look at those older apartments, but the quality of application still remains a little bit lower than the rest. The reason why I write pet potential is a key factor is that the other WA lags behind a little bit in what the other states are doing in legislation, and we are currently under review to say that pets will probably be mandated unless you want to go and get an order. So pet potential is a key factor. Big one is always proximity to education. If you look at all our education suburbs, they're huge. When you look at the 25,000 people that wanting to migrate here at the moment that are sitting on a wait list, education is a big part for people. You know, Bob Hawke was just built a year ago and is just running through their first lot of year 7s, you know, brand new education facility, tipped to be one of the best. All these sort of suburbs are really important. And then the next big one is that if anyone wants to do a search on what is happening, so realestate.com put out some really, really interesting markers. Searches in Brisbane and Perth from areas like the US, Asia, New Zealand are up more than 400%. So these are people that are going, coronavirus is not great to live in that high density. What are those amazing suburbs that we can live in Australia? Now, Sydney's priced themselves out of the market for a lot of migrants. So is Victoria. And if you want to have a look at REA search results, they'll actually tell you what countries are searching and where they're searching. And the biggest stats are in Brisbane and Perth at the moment. To tell you the truth, as soon as we do open up for migration here, I think you'll find that the 25,000 that we already have sitting pending in WA, look, we could not supply that many houses. We'd built 1,600 new properties last year, only 900 this year. Let's assume that maybe they allow 10, 20% of those people that have applied to move here. We just don't have the stock, and we already have such a tight market. So just to let you know, Perth sales prices have also already increased based on this. That's it. I'm done.
Well, thank you, Jamie. And again, just like with Samara, what we are hearing is that massive demand and not nearly enough supply. And I will reinforce what you said. All the research and reading that I'm doing too is not only the overseas migration, but our own residents living in Australia are moving away from the big cities. They're moving away for for health reasons and also for lifestyle changes. So obviously cities like Perth and Brisbane they offer the lifestyle, they offer the weather, with people being able to work remotely now. That has really helped. And even in the big cities, if they don't want to leave New South Wales and Victoria, we're also finding that they're moving within 1 to 2 hours of the capital cities. They go to work once a week, and then they work from home, the balance. So there's a bit of a trend happening, and those are something that I spend each and every day studying and talking with the builders, developers, and the property managers. So it's really important to speak to us to find out where the trends are going, what are the demographics, because you want to be purchasing an investment property where the demand is going to be high and supply is going to be low. And like Samara and Jamie have always said, if the demand is for a house, you know, we don't go and buy an apartment there. If there's lots and lots of supply of houses, maybe it's time to look at a townhouse or something different so that the supply is controlled. So look, we've had a wonderful education session tonight. I hope you've really enjoyed it. I don't know if I've got any questions coming through. We've got some questions, something coming through on the chat here. Okay, this has come from, thank you. So this is from Matthew and Bianca, our clients that recently settled. Hi, thank you, enjoyed the Zoom very much, very interesting. So thank you very much for that feedback. If there are any questions, this is a wonderful time to send them through. The call to action from now is, one thing is providing information, all right? Now it's up to you to do something with that information. There's a rule of 48, okay, which is the 48-hour rule. So what are we today? Thursday. By Sunday night, if you haven't sort of used this information to do something constructive, you'll be going back to the information you used and that you knew before this event. What I would like you to do is to reach out to your finance broker or your bank to assess your current financial situation and your loans. Are your loans as sharp as they can be done? As Murray said, is your broker or you're going to phone your bank to make sure you got your best rates? What I then want you to do is to try and understand if you had a purchasing capacity. So I'm not asking you to buy a property. I'm asking you to understand if you have the ability to purchase a property and how much would that purchasing capacity then be. Then if that's of interest, that's when you will sit with myself or Garrett or Murray to understand your options. We do have a general stock list, but we like to customize the right property for you. And the only way we can do that is, the most important thing is, let's understand how much your purchasing capacity is. Let's understand what your goals are and what your plans are, your own individual, you know, are you buying it to pass on the properties to pass on to your kids? Are you looking for positive cash flow properties to help with your cash flow? Are you looking for a capital growth portfolio? What is it that you're looking for? And always, like we've said, from Garrett, from Samara, all the speakers tonight, it's a long-term hold. So all of our clients, what we're saying is you've got to hold for 15 to 20 years. We're hoping that all our research and everything that we can line up for you is that you get that capital growth quicker than waiting a full 20 years. But the world's an ever-moving place, and there's a lot of moving parts. So as much as we use the research to try and time the market, it comes back to Gareth's thing about time in the market. And you've got to be prepared to sit for 15 or 20 years in property to let it do well for you. It's not a get-rich-quick scheme. So I think we're just winding up. Thank you. We got some more feedback. Excellent webinar. Thank you for the information. So from behalf of all the speakers, I just wanted to say thank you very much. Murray, thank you very much for sharing all your experience. That was very good. Thank you. Garrett, thank you for sharing all your experience too and your strategies. Samara, always wonderful to hear what's happening in Brisbane, Vegas. Lovely picture behind you. Very tempted to come and see you very soon. And Jamie, also thank you for...
Thanks, Garth.
You got your fingers on the pulse. You're dealing with this every day. So thank you very much. I hope you've learned something this evening. We're very strong on our education. It's the first place to start. I will be reaching out there. This will be, we have video recorded tonight. I will send you a recording tonight, stroke tomorrow, and a copy of the slides. And I'll be reaching out, Garrett, Murray, or myself will be reaching out to you in the next couple of days just to see what you thought. And if you need any help or assistance, if you don't have a finance broker, we could make a recommendation is just to do some inquiries. It costs you nothing. And you find out what you can or what you can't do. Then it's up to you if you want to take action. So on behalf of Property Powerhouse, thank you so much for being on this evening. Thanks again to all my wonderful presenters. Love your work. And have a great evening. Thanks, guys. Cheers. Bye-bye.